Are you underwhelmed with a strong buy?
I am. I think this quarter we knew that coming in, the spending on direct-to-consumer initiatives is going to kind of depress the overall results. I think the company has telegraphed that they're going to ramp up their spending on that division. But everything else seemed, I think, at least in line with expectations. Theme parks was a little bit soft on the operating income number, but the underlying trends there still seem to be fairly strong. The studio was the main highlight. We knew that Avengers Endgame was going to be kind of the driver, as well as Aladdin. So overall, I think we're pretty staying with our strong buy recommendation.
So, Tuna, we knew kind of from the last earnings report that this spend, particularly for the streaming service, was going to be a little bit of a drag in the interim. I guess I'm wondering that once they finally get Disney Plus up and running, I guess later this year or into next year, do you think that there will be an immediate payoff that we'll see in the earnings results, or is this something that's going to be dragged out over several more quarters?
Well, I think the answer to that question actually was provided when the company had their investor day a few months ago, where they kind of telegraphed, how this direct-to-consumer business is going to evolve. I think it's kind of a several-year, 2 to 3 year outlook to get to profitability, potentially 4 years. But the subscriber projections that they've provided for Disney Plus, along with ESPN Plus, as well as Hulu, I think were pretty encouraging. There's no question that there's going to be some near-term pain as they kind of launch this and ramp it up. But for the long term, I think it has the potential to be a game changer.
I'm not really into all these like superhero movies, but I'm aware that they're a pretty big deal, saying 32% studio entertainment revenue growth. Is there like any prospect of that slowing down, or is this just sort of this juggernaut where it can become almost like a recurring revenue?
Look, I think the studio for Disney, with the Fox acquisition layered on, has the potential to dominate for many, many years to come. I mean, think about this year alone thus far, where they have 5 titles that are poised to break through the $1 billion global box office mark, including Avengers Endgame. If you throw in Toy Story now approaching $1 billion, Aladdin, Captain Marvel, and then you look at the franchise pipeline, it's kind of nothing short of phenomenal, almost like an embarrassment of riches here. Fox brings a lot of other assets, so I think Disney's dominance in the film studio is going to be astounding for many, many years, and will kind of continue to feed the other platforms, whether it's the theme parks. We just saw Star Wars Galaxy Edge open in Disneyland, and so on. So I think they're in a very, very enviable position in terms of the franchise pipeline.
We saw their third quarter parks and experiences come in at 6.6% growth quarter on quarter, $6.5 billion in revenue, Tuna. They have a Shanghai Disneyland. They are exposed to China to a certain extent. It's an iconic US brand, Disney. Is there any stress or concern that they will be caught up in the headwinds of trade concerns and tension?
Well, that's one question I'm sure will come up in the earnings call that'll start soon, the potential impact of the Chinese trade tensions on the theme parks over there. Thus far, it doesn't seem to be having any major impact. The underlying trends there have weakened somewhat in tandem with the overall Chinese economy, but I don't think there's any overriding concerns that they're going to fall off the cliff anytime soon. More importantly, I think they're looking to potentially develop another international theme parks. India has come up as a potential venue, although there's been no official announcement. So I think for them, they are going to be looking for new areas and markets to exploit all of these franchises across the world.